We are pleased to welcome you to this meeting presenting Wavestone's results for the first half of the fiscal year 2022-2023. Today, the speakers are Pascal Imbert, co-founder and CEO of Wavestone. Hello, Pascal.
Hello, Justine. Hello, everyone.
And Laurent Stoupy, CFO of Wavestone. Hello, Laurent.
Hello, Justine. Hello to all.
Laurent, the floor is yours.
No, I think it's not.
Pascal, sorry, Pascal, the floor is yours.
Oh, as you like. But, all right. As we announced on October 27, over the first half of 22-23, Wavestone posted a revenue of 237.1 million euros, a rise of 9%. I recall that this growth includes the consolidation of Pen Partnership during 2 months, and does not include, for the time being, Chorus Consulting, which will be consolidated from October 1st. At constant scope and on a constant forex basis, organic growth came out at 4%. If we look at our first half KPIs, we can see that the utilization rate came to 75%, in line with the normative level for the firm, 75% to be compared to 77% for fiscal year 21-22. Regarding prices, trend was positive. As a result, for the first half overall, the average daily rate came to 880 euros, up 3% compared with the previous year. On a constant forex basis, the average daily rate increased of 2% to 872 euros. The pace of order intake remained steady during the summer, but the sharp increase in our headcount planned for the third quarter led to a decline in the order book, which stood at 3.7 months at end September versus 4.2 months at end June and 4.3 months end March. Regarding our human resources, the pace of recruitment remained steady throughout the first half, and we are on track to achieve the objective of our full-year roadmap, which aims to attract 1,000 new employees over the fiscal year 22-23. The staff turnover rate, however, remains high. On a 12-month moving average, it came to 19% at end September, unchanged versus end June 30 and up from 18% at end March 2022. All told, Wavestone added 132 new employees to its headcount over the 6-month period, bringing the total to 3,864 at end September 2022. Laurent, now, if you would like to walk us through our P&L.
Yes. So during the H1 22-23, our expenses returned to a more standard level, and in particular, we accelerated our spending on recruitment and human resources. In terms of profitability, Wavestone's EBIT was 29.7 million euro, down 7% compared to the first half of 21-22. Our first half operating margin on operating activities came to 12.5% versus 14.6% a year earlier. I recall that in H1 21-22, profitability had been exceptionally high in the post-COVID-19 context, marked by a recovery in activity and still moderate operating expenses. For its part, the 12.5% margin for the first half of 22-23 is in line with our business plan. After taking account of depreciation of customer relations and other non-operating charges, mainly made up of costs linked to the acquisitions of Pen Partnership and Chorus Consulting, operating income came to 25.7 million euro, down 15% compared with H1 21-22. The cost of net financial debt and other financial charges remained practically flat compared with a year earlier. All told, after taking account of our tax expense, net income came to 17.9 million euro, down 14% compared with H1 21-22. The net margin came to 7.6% versus 9.5% the previous year. Let's now look at the cash flow statement. At the end of H1 22-23, Wavestone's self-financial capacity before net financial debt and tax expenses came to 30.1 million euro, down 12% compared with H1 21-22. After taking account on the payment of tax amounting to 12.2 million euro and an increase in working capital requirements of 25.4 million euro, activity generated negative cash flow of 7.5 million euro over the period versus positive cash flow of 3.5 million euro a year earlier. The increase in working capital should be considered in light of growth in activity and the traditional decline in tax and social security expenses during the first half of the fiscal year. Investment transactions consumed 52.1 million euro over the first 6 months of the year, linked mainly to the acquisition of Penn Partnership and Coeus Consulting. Note that Coeus Consulting, acquired on September 13, will be consolidated from October 1st. At September 30, these shares were carried on the balance sheet as non-operational financial assets, and the initial price paid is presented in the changes in financial fixed asset line for an amount of 22.2 million euros. For information, Coeus Consulting cash position at the same date stood at 2.1 million euros. Lastly, finance-related flows absorbed 21.1 million euros for cash. They constitute 7.6 million euros in dividend payments in respect of full year 21-22, 6.5 million euros linked to share buybacks, which enable us to cover all of our free share allocation plans, and 4.1 million euros in debt repayments, and in line with IFRS 16, repayment of lease debt amounting to 2.5 million euros. On the balance sheet, you can see that shareholders' equity rose 10.7 million euro to 267.7 million euro at September 30, 2022. Goodwill increased by 38.9 million euro, mainly linked to Nomadis and Penn Partnership acquisitions. Financial assets, which increased by 25.6 million euro, include equity investments amounting to 25.5 million euro following the Coeus Consulting acquisition. By March 31st, 2023, the assets, liabilities, and goodwill stemming from the Coeus Consulting acquisition will replace this equity investment on Wavestone's balance sheet. Owing to the impact of the acquisition of Penn Partnership and Coeus Consulting, net financial debt came to 16.2 million euro at the end of H1 22-23, compared with the net cash position at 60.3 million euro at March 31st, 2022. We target to return to a positive net cash position of between 30 and 35 million euro by March 31st, 2023, thanks to the stronger cash flow generation traditionally seen in the second half of the fiscal year. This estimate does not include any new acquisitions. And I hand over to Pascal to talk about the outlook.
Thank you, Laurent. So now let's turn to the outlook for the coming months. For several months now, the economic backdrop has deteriorated and has led to the increasing probability of a slowdown in consulting demand in 2023. This leads us to take a cautious look at the fourth quarter of our financial year, especially at the beginning of the calendar year, which corresponds to our fourth quarter. This beginning of calendar year is often marked by some latency of our clients in their spending commitments. However, we do not anticipate a sharp and generalized slowdown, On the contrary, we remain confident that certain sectors, such as banking, energy, luxury goods, certain sectors will continue to hold up well. Even though the environment is more uncertain for 2023, we have decided to continue our efforts in terms of recruitment. We therefore maintain the objective of hiring more than 1,000 new employees over the entire financial year, an objective that we are well on the way to meeting, as I mentioned earlier. In parallel, we are, of course, continuing to work on our actions to reduce the staff turnover. And among these actions, I confirm that we have adjusted our salary policy, as announced before the summer. The adjustment being made should allow us to maintain our position in a very competitive HR market, but they shouldn't wait on our sales prices to salary ratio, thanks to the good orientation of our prices. So we are keeping our focus on the growth of our workforce, and at the same time, we develop an intense commercial actions, which we are directing in particular towards the most resistant sectors, which I mentioned a moment ago, banking, energy, and luxury. Regarding the specific situation of the public sector, given the persistent controversy regarding the place of consulting firms in this sector in France, we have decided reluctantly to largely reduce our commercial investments allocated to the ministries and key administrations in France. Regarding now to external growth, we do not plan any further transaction in the UK over the coming months. In this geography, our priority, of course, is to succeed with the integrations of Penn Partnership and Coeus Consulting. Our sights are therefore set on other geographies, in particular the United States, which is a key geography targeted by Wavestone, as you all know. And we do not rule out some tactical deals in other geographies, in other countries, including in France. Regarding our guidance for the end of the fiscal year, we confirm our annual financial objectives, and we update them to factor in the consolidation of Penn Partnership over 8 months and Coeus Consulting over 6 months from the beginning of October. As a result, for fiscal 22-23, we now target consolidated revenue of more than 525 million euros, compared with more than 505 million euros initially. And our target of an EBIT margin of around 15% for the full year remains unchanged. Thank you for your attention. Laurent and I will now be happy to answer your questions.
Thank you. So you can now ask your questions. To do so, please unmute your mic.
I've got maybe one question, if I can throw one out there. Pascal, it'd be great to just get an update on what you're seeing in the US and how the company's efforts are going there. And I know there have been some challenges over the last year, so would just love a little bit of an update on how everything's going now.
Yes, hello, Ben. Good to hear you. Yes, situation is improving, even if it's the improvements are slower than what we targeted at the beginning of the fiscal year. We were positive in EBIT margin over the first half, but not very positive. So we have still to continue to work. I would say that even if the market in the US for consulting is less good than it used to be 1 year ago, we see a much more positive commercial efficiency of our teams. We are in fact, experiencing the fact that being more consistent, more focused on some key accounts, we obviously get better results, and we're confident to continue to improve our commercial efficiency, our sales in the H2, and to continue to improve profitability. So I would expect a higher profitability in H2 than H1. I hope closer to 10% over the H2.
Great, thank you. It's good to hear you as well.
So you can unmute your mic if you have any questions. If there is no more question, Pascal, I'll let you conclude.
Laurent, you see, you provide too many figures, so people are lost. No. I'm sorry for that. Okay, so thank you very much for attending this conference call about our H1 results. Our next publication will happen end of January for the revenue of the third quarter of our fiscal year, and we will be able to give you at this date more update on the market situation and on our outlook for the end of the fiscal year, and first maybe ideas about what could happen in 2023, beginning of our next fiscal year. Thank you very much for your presence, and talk to you soon.